everybody. This is Bob Iacchino from Path Trading Partners, along with Mike Arnold as always. Wanted to do an afternoon path chat on equities. Mike is going to show you on the charts what he's seeing in the general indices. All four of the major U.S. indices finished at record highs and closed at record highs. You can look up what the actual levels were, but the S&P finished up 53 basis points, which is just over 0.5%. The Dow was up 70 basis points, which is just short of 0.75%. NASDAQ up 52 basis points, and the Russell 2000 up 0.25% or 25 basis points. Not a lot of news today except for President Trump playing nice with Abe over the weekend, Prime Minister Shinzo Abe of Japan, and with Trudeau from Canada. There was a lot of niceness going on between the President and the Prime Minister of Canada, talking less about repealing NAFTA and more about taking care of that particular cross-border partnership between Canada and the U.S. Interesting, I'm looking at a market review. I won't say who it's from, but it's saying that crude oil lost 1.8% on supply concerns. The interesting thing, copper is also rallying on supply concerns. This is why Mike and I like to look at actual price action, because when you see something like on supply concerns, one commodity is rallying and the other is falling, both on supply concerns. Now, obviously, we're going to do a commodity update, but copper's rallying because of lack of supply. Crude oil's falling because of the perception of too much supply from the U.S., where on Friday, crude oil was rallying on compliance with OPEC, which would also be a supply concern. Less supply. Again, the reach for people to understand why things are moving, not as important as the price action of what actually happened. So Mike is also going to cover some specific stocks and their price action, Netflix, Coca-Cola, and Apple. So let me just turn it over to Mike so he can show you what actually matters.
Okay, thank you very much, Bob. We have our weekly chart of the Dow up here in this rising wedge. Critical area coming up pretty soon. We have the upper line, the resistance line of the wedge, and we have a 37.5 Gann level coming in very similarly. That is about the 2490, you could say the 2500 level. So again, this thing can keep going until it doesn't. What we're going to be watching for is if we do get a correction, if it violates, first stopping point is going to be this 8 EMA. That's going to be some support in that area. Then we have the rising support line in the 21. There's with the daily. I mean, it's sort of over the last 3 days, it's really taken off. You can see the upper channel line on there. The NASDAQ, we're approaching the upper line too. So watch, this could be resistance. This is really, again, overheated, but can they keep going? Yes, they can. We don't try to call tops or bottoms. We look at trades. And right now, the only trade is if it breaks the support line. The S&P, we have it burning through its levels too. We got all the way up to a 62.5 Gann box level, which we had resistance on at 23.29. The next levels higher, 23.35 and 23.41 are the next two levels higher. And finally, the transports, which we also talked about this morning. This is now, you can see it on a daily basis. We were following it on a weekly basis, but you can clearly see we're now in the three top territory. So this is a triple top. Let me switch to my weekly chart. I said if we got back up and retested last week's highs, it's no longer a valid pattern. So I've taken it off to the downside. If this does continue higher, next levels we're looking at are 95.24 and then 96.32. That's all I have in that category. Let me switch over to stocks. We have Apple. Next target on there was 133.30. Today we had a high of 133.82 and closed at 133.38. So that target is reached. I have no more targets on my radar screen for Apple right now. And this is an all-time high close. It's not the all-time high move, but it's an all-time high close. Netflix. We finally got a pullback. We rallied a bit higher this morning. We pulled back straight to the 8. Next major support is around this 142.50. Then we have stuff around the 140.80 mark, and we have the rising 21 coming in right now, and that's about 139.59. So this whole area in here is a big support zone rotation. So we could further pull back. Now, what would invalidate, just to reiterate, what would invalidate me expecting higher prices longer term in Netflix is if we get a close below the 21 and a close below this 139 level, which at this point would happen simultaneously. That would be my alert that something is not right and to reevaluate the higher prices for now. And finally, Coke. A couple people reached out to me and asked if this was on a weekly basis, if this was a double top. Let me switch to a daily. This is a little teaching lesson, which most people get wrong. This would be that double top on a daily. What we watch for is the move that created the double. If the target of the double, the minimum target I'm talking about, of profit-taking target, exceeds the move that created the double, it's not a valid double for us. So this, on this daily basis, you had this move that created it, and you had this double. The first target lies below there. I measured it out. So that would not be a valid double. Switching back to a weekly, that would be that double on a weekly. And even if you looked at this whole move, this would be the move that started it. This would not be a double on the weekly because the target would be down here. Here's the move that started it. Speaking of that, we have this 62 and a half GAN level, about 40, 50. That's going to, and we have a trend line coming in here. If we get a close below here, watch for the next key level for Coke to possibly trade down to about the 39.88, which is a key defining point on our rising trend line. And then if that's broken, we're looking for a possible move down for 39.20. Coke's been pretty active recently, lots of trades going in and out, and a number of people have asked me about it, so I thought I'd do a quick video update. If we do rally, we have the declining rotation zone, which is very powerful on the weekly. You can see every time it's gotten up there, you can see how it's been resistance. It might poke through, but it has not closed above it. So if we do rally, this area is pretty major resistance from about 41 to the 41.64 level is pretty major resistance. That's all I have for you, Bob. Back to you.
Thank you, Michael. Again, remember, price action is the only thing you can be sure of when you think you know why something is moving. It doesn't give you insight as to whether the move is going to continue or not. It only gives you comfort to sit in what may be a bad trade, or confidence to leave a trade on longer than you should, and a lot of just incorrect emotions like that. Thanks for watching. We'll talk to you guys soon. Money Path Podcast. You can find it at pathtradingpartners.com, or you can type in the Money Path Podcast into iTunes. And please follow us on Twitter, like us on Facebook, and visit us at pathtradingpartners.com. Cheers, everybody.